In this video, we're going to be looking at the latest stock I added to my portfolio, and that is Waste Management, stock ticker WM, trading at $173.64 per share. Now, when I added this company to my portfolio, it was trading at around $152 per share. And if we zoom in, we can see obviously since then, I have seen pretty good gains from this position. I'll go ahead and blow up my growth chart. And you can see Waste Management, again, the latest stock I added. I'm currently up around 14.18% on this position. So yes, short term, I've seen some nice gains, but obviously I am in this for the long term. Now, this company currently has a starting dividend yield sitting at 1.62%. So not a crazy high starting dividend yield, but there are some metrics that make me really like this company from a dividend perspective and from a very long-term perspective. So in this video, of course, we'll be jumping into the dividend metrics. We'll be looking at a valuation of Waste Management, but we'll also be jumping into the investor's presentation because I think we can pull some great insights about the future of this company from this presentation. So let's go ahead and start digging into it by looking at some dividend metrics. I'll go ahead and jump over to the dividend history and we'll scroll down and we can see from a 10-year perspective, it looks like pretty solid dividend growth. In 2013, they were paying out around 37 cents per share every single quarter, and jump forward to now, it's now sitting at around 70 cents per share every single quarter, so it has doubled since then. If we look at the dividend growth rates, we'll scroll down, we can see they've seen decent dividend growth over a 3-year period, sitting at around 8.7%, a little bit slower over a 5-year period at 3.37%, in the 10-year sitting at 6.73%. So not crazy high dividend growth, but it has been reliable and steadily growing over that time period. Now, if we look at the dividend safety again, I want to look at the free cash flow payout ratio because dividends are paid out of free cash flow. And we can see for the trailing 12 months, it's sitting at around 26.07% and forward looking sitting around 24.79%. So that is a very healthy range for this company's cash flow payout ratio. It leaves plenty of cash flow left to do things like attempt mergers and acquisitions, reinvest back into the business or buy back shares, and pay down debt. So let's go ahead and start jumping into the investor's presentation, kind of figure out why I felt like this was an interesting play and an interesting company to add to my portfolio. So if we jump over to the investor's presentation, the first thing I want to point out is this is a presentation from July of 2022, so they haven't put out an updated one yet, but we can still get great insights from this presentation. But let's go ahead and jump over to the fourth slide. So we have the Waste Management investment thesis sitting right here, and I want to point out a couple of the key factors as to why I invested into this business. The first two things I want to point out are in the strategic focuses tab right here. One of the main focuses is lowering cost to serve and differentiating customer experience through technology and automation. At a certain point, it does become more difficult for large companies to grow, but they can reduce costs through automation and technology, and that's a huge focus for Waste Management right now, and it's an area I think they'll see a lot of success in. And they're also investing in sustainability-led growth that positions Waste Management as a partner to our customers. Now, this is great news for Waste Management. What they're also not mentioning here is there is potential for tax credits from the company, which could also lead to more profitability for the company. But my two favorite things about this company are right here in the business and financial profile. It's the recession-resilient revenues and the strong and consistent free cash flow to fund balanced return of cash to shareholders and growth of investments. Both of these things are the main reason that I absolutely love Waste Management stock, and I'll go ahead and show you what I mean. If we go ahead and jump over to the 7th slide, right here you can see recurring revenue. 75% of revenue has annuity-like characteristics. To me, that is a phenomenal business model, and it makes it extremely recession resilient, not to mention that you're also providing customers and communities with an essential service, something that they cannot go without. If we jump over to the 24th slide, we can see right here in 2020, when we went through some pretty difficult economic times, as we all know, their adjusted operating EBITDA was not hurt pretty much whatsoever. There was a slight impact, but not much whatsoever. But at the same time, free cash flow was able to grow at a really nice rate over that time period. So again, very recession resilient. Now, if we jump back over to the 6th slide, there's a couple of other things I want to point out. Basically, how do they make money? Well, we can see they have collection, they have transfers, they have landfills, and they have recycling. And we can see a breakdown of what their 2021 revenue mix was, coming in at around $17.9 billion. Now, collection was the biggest part of this, coming in at around 54%, with everything else fairly well diversified, and landfills coming in at around 19%. So if we jump over to the 22nd slide, we'll keep moving forward. And one of the ways that Waste Management seeks to use their free cash flow is to attempt mergers and acquisitions. Now, I haven't covered many companies lately that are attempting mergers and acquisitions, but Waste Management feels like they found some good growth opportunities through doing this in the past. We can see in October of 2020, they had the acquisition of Advanced Disposal, adding $1.2 billion of annualized revenue with $100 million of operating cost. So again, mergers and acquisitions, something they're definitely looking to take advantage of moving forward. If we go ahead and move forward to the 26th slide, I'll hit enter. we can see the cash generation translates into consistent capital allocation. Now, understanding a company's capital allocation, in my opinion, is one of the most important things you have to look at as an investor. One of the most important roles of management is to focus on capital allocation, so you can get a great insight into exactly what the company is looking to do with their free cash flow when you look at their capital allocation. Now, keep in mind, again, I've said this before, and I'll continue to say it, but there's 5 different things a company can do with free cash flow. They can reinvest back into the business, obviously a good opportunity for growth. They can pay out dividends, they can attempt mergers and acquisitions, they can perform share buybacks, and they can also pay down debt. Now, these 4 are typically how you can provide value to shareholders, and I think reinvesting back into the business for a company is always going to be a point of focus. So we can see for dividends, they're targeting around 40 to 50% payout of free cash flow. If we jump back over to Seeking Alpha, we already glanced at this earlier, but right now, their free cash flow payout ratio only sitting at around 24 to 26%. So ideally, they could bump this up a little bit if they wanted to, as long as they can sustain their free cash flow. So that's something good. We could see higher dividend payouts in the future. We have 19 years of consecutive dividend increases from this company. Another thing that I'd love to see. We already touched on the mergers and acquisitions. They successfully integrated $4.6 billion acquisition of ADS. And then we have share buybacks. They're expected to repurchase $1.5 billion of stock in 2022, exhausting full share repurchase authorization. And here's what's really impressive about the share buybacks. Over the past 3 years, they've been able to buy back a total of over 2 billion shares while still funding the ADS acquisition. So if we come over here, we can see their capital allocation breakdown. 36% of their free cash flow being reinvested back into the business. Ideally, this is something I would like to see make up the largest portion of their free cash flow, which is the case for them. And then we have mergers and acquisitions at around 32%. And the dividend payments only made up 19% of their capital allocation, and then we have 13% for buybacks as well. So overall, pretty satisfied with this capital allocation plan. Now, the last slide I want to look at is the 27th slide, and it's basically just showing that dividend growth over time, while we can also see that payout ratio. Now, something that is a sign of an extremely healthy company is if you can see growing dividend payments over time, while the free cash flow payout ratio is staying steady. And in the case of Waste Management, other than 2012, that's exactly the case. And in fact, if we look at it from around 2017 to 2021 or 2022, we can see very rapid dividend payout growth, while that cash flow payout ratio is not only staying the same, but it is slightly declining over time. That is a phenomenal sign for this company. So from an investor's presentation standpoint, some of the things that we looked at there make me feel very good about this company. But with all of that being said, is trading at $173 a good price to consider buying in at for this company? We can see since around September or October, we've seen really nice growth from this company. Again, I bought in when it was trading around $152 a share. So again, I've seen pretty good growth short term over this company. Let's go ahead and jump into my stock valuation spreadsheet, where we'll be looking at a few different valuation models in this scenario. Like always, if you'd like to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. But let's go ahead and come up here and plug in WM and hit enter, and you can see all this data will automatically load in. Now, the 20, 50, and 200-day moving averages for this company all up a little bit. We can see analysts have a target price of $181 a share, pretty decent institutional ownership at around 82%, and a beta of just 0.7, so you actually shouldn't see very much volatility with this company. Now, the first valuation we typically look at is Graham's valuation, but I don't think it's a good valuation in Waste Management scenario, so we're going to move forward and look at the DCF model. Let's go ahead and zoom in. Now, the idea behind Waste Management's discounted cash flow models, we should be able to find a fair value depending on how much free cash flow they are producing and what the growth rate of that free cash flow is. So you can see here, I projected out the future free cash flows for this company, found the present value of those future free cash flows and added them together, add the company's cash and cash equivalents, subtracted out total debt to get equity value, divided by shares outstanding, and came to a DCF price per share of right at $160 a share. Now, the next valuation we'll look at is the multiples valuation. We can see here basically what we're doing is we're looking at how the market is valuing companies that are similar in structure using a price to earnings multiple. Now, the average PE for these comparable companies is sitting at around 33 even. So when we look at Waste Management's earnings per share, multiply it by the average PE, we come to an intrinsic value of $187.23, which again, if we jump back over to that stock screener, we can see was pretty close to what we saw for our analyst target price. And finally, if we jump over to the dividend discount model, one of my favorite valuations for a dividend stock, we can value this company based on how much they're paying out in dividends and how much that dividend is increasing over time. So you can see I plugged in the quarterly and the yearly dividends here, so we can see those year-over-year dividend growth rates. Moving forward, I'm projecting a dividend growth rate of 7%, discount rate of 8.5%. That gives us a dividend discount model price per share of $199.73. So when we jump over to the output tab, we can see the three valuations that we use in this scenario. We have our DCF at around 160, multiples at 187, and dividend discount model very close to $200 per share. Average all three of these together and we come to an intrinsic value of $182.26. With the current trading price sitting at $173.62, it looks like they're undervalued by around 4.74%. So it is pretty close to its fair value. With a 10% margin of safety, you could see our acceptable buy price sitting around $164 a share, and with a 20% margin of safety, acceptable buy price of around $145.81. Again, I was fortunate. I was able to buy in at around $152 a share, and I did make a video pretty close to when I added this to my portfolio to let you guys know, but again, I'm up around 14.5% with this position. Now keep in mind, again, like always, short-term growth from any of my positions is really exciting to see, but I'm in this for the long term. I'm looking to buy stocks that I believe will allow me to one day live off dividends. So even if Waste Management would have continued to decline since I bought the stock, I still would have been happy to own this company because it fits in line with my long-term goals of desiring to live off dividends. I expect to see growing free cash flow for this company, steady and reliable growth rates from the company, and growing dividend payments. This isn't a company you'll see massive growth rates year over year from, but it's very easy to see the path to growth in the future from Waste Management, which is a big reason I added them to my portfolio, along with all the reasons that we saw in the investors presentation. So there you go. There is an analysis on Waste Management. It's trading pretty close to fair value, it looks like, as of right now. So whether or not you want to add it to your portfolio, I'll leave that up to you. But if we continue to see any more decline from this company, I'll consider adding more shares. Like always, if you'd like to join a community of dividend investors and get access to any of my spreadsheets, then you can head over to my Patreon page at the link in the description. You can also get a discount on Seeking Alpha at my link in the description, so be sure to check that out as well. But with all of that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.